Welcome to Late Night Stocks. What a roller coaster week we had. Especially for tech stocks, we had a lot of ups and downs, but for all indices, we ended the week rallying. Will this rally continue while Jerome Powell speaks on Wednesday? We will see. In this video, first we will have a look at the earnings last week. We will review this mega cap earnings, and then we will have a look at the next week's earnings. I will review AMD and Airbnb stock. At the end, looking at the inflation and the jobs data, we will talk about the Fed's meeting on Wednesday. So let's start the earnings in the previous week. We had a huge earnings. On Tuesday we had Microsoft and Google. Microsoft was okay, but they missed the forecast. Google was really bad, like their YouTube revenue is almost same as their Google Cloud. And you can think that YouTube is keep growing, but it is not. It is only the 10% revenue of the Google, and we have seen the slowdown in the growth. In general, advertising sector is slowing down. That's why Google and Meta earnings was horrible. And on Wednesday, we had Amazon and Apple earnings after market close. First, we had the Amazon earnings, but it was horrible. So Nasdaq and all other indices were keep dropping. Then 30 minutes later, the last castle for Nasdaq, Apple announced their earnings. Everything was really good. It was a beat. Everybody was expecting a slowdown in Apple's revenue and their profit margin, but they didn't. After Q3 announcement of Apple, stock market started rallying. Again, we see that Warren Buffett was right and Apple is a phenomenal stock. If we look at the Warren Buffett's company Berkshire Hathaway, the top holdings, Apple is the first with 40% of the portfolio. They had a good bet and now they are getting the profit. On the other hand, they have Bank of America, Coca-Cola and so on, and these companies also perform really well in Q3. That's why Berkshire Hathaway is increasing again. If you look at the stock price of the Berkshire Hathaway, it was $360 before this crash. Then it made the low around $260 and we rebounded again with this Apple news. In my opinion, in the long term, Berkshire Hathaway will make new highs. They had a huge cash in their portfolio before this crash. If they are shopping, if Warren Buffett is shopping very well at the moment, I think in the long term we will see all-time highs for Berkshire Hathaway. Every time they stock this, maybe we can add to our portfolio to diversify it and reduce the risk. On the other hand, we had the earnings of Southwest Airlines. If you watched my video last week, I mentioned this stock. Last week when I mentioned this video, Southwest Airlines was $33 before the earnings, and I said that they have a really good balance sheet and it can be a good time to buy. Now it is at $36, made a 10% gain in 1 week. If you consider the other tech stocks like Google, Microsoft, they dropped 10%. It was a good move in my opinion. I think there's a still upside potential like $40, but we have Fed's meeting on Wednesday and we may have a correction. Besides these mega cap earnings like Google, Microsoft, Amazon and Apple, we had two important data. On Thursday we had GDP and on Friday PC inflation. Last week in my video I was mentioning that we will go from negative to positive GDP and that can boost the stock market, and it is exactly what happened. Forecast for GDP was 2.4% and we had a beat with 2.6%, but this can be misleading. In the GDP report we have seen some general slowdown in the markets. On the other hand, I also mentioned the importance of the PC inflation data on Friday, and that was the key. The forecast for the core price PC inflation was 5.2% and we had 5.1%, which was really positive for the market. But don't forget that core PC price inflation is still increasing and this is not good for Fed. So in general, we had not a good Q3 earnings for these mega cap stocks, but with this inflation data and GDP growth, we are now hoping that Fed will tighten less in the future. But don't forget, it is just a hope. We will see the reality on Wednesday. If we look at the next week, we will have some important earnings. For example, we will have Pfizer, BP before the market opened on Tuesday, and after market close we have Airbnb and AMD, and on Wednesday we will have Etsy, and on Thursday we will have PayPal. So in general, market volatility will continue. I want to focus on AMD and Airbnb earnings this week. Let's start with AMD stock. It is at $62 and $100 billion market cap. Is it a buy before the earnings? We have a slowdown in computer sales. On the other hand, this China limitations for semiconductor stocks is also painful. There can be still downside potential, but most of its pain is already priced in my opinion. When we look at the quarterly earnings of AMD, so far we have a really good growth with nice profit margins, but in Q3 we will have a slowdown. But after that we can have a recovery for AMD stock and it can keep increasing. In the recession and economic slowdown, we need to look at the companies with strong balance sheet and positive free cash flow. And AMD is one of them. For example, they have $8.5 billion in their current assets. On the other hand, when we look at the current liabilities, it is only $4.2 billion and long-term debt is only $350,000, which is really good. If we look at the cash flow, they had around $1 billion positive cash flow quarterly. So financially for this recession, they have no problem, but the real problem is for AMD is the demand. When we look at the AMD stock, it is at $62, which is before the pandemic levels. With a miss in Q3 earnings and hawkish Fed talks, it can go maybe to $50, but I don't think AMD will see below $50. In the long term, I am expecting that it will go above $75 and it will consolidate around 75 and 90. What do you think about AMD stock? Would you buy now, before earnings, or would you wait? Let me know in the comments down below. Another earnings we have on Tuesday is Airbnb. Airbnb stock is now at $115 with $75 billion market cap. Don't forget, this stock made the IPO around $170. Now we are below these levels. No one is talking about that. When I look at their balance sheet and their cash flow, it looks really positive. If we look at their balance sheet, they have almost $18 billion in cash or cash equivalents. On the other hand, they have $12 billion in current liabilities and $2.5 billion in long-term debt. Don't forget, we had 2 years of pandemic and that was really bad for Airbnb stock, and after these 2 years they have still a good balance sheet. Here you see the free cash flow of Airbnb stock. As you see, they had always positive free cash flow, which is really important if we are in the recession or economic slowdown. The reason is they don't need to take a debt with these high interest rates. So their revenue comes back to normal around $2 billion quarterly. We will see what will they bring in Q3. And on the other hand, their EPS was negative in the last 2 quarters, in the last quarter, and they become positive again. And it is expected that their EPS will grow. So this reversal from negative EPS to positive EPS will attract more attention to Airbnb stock. What do you think about Airbnb? Would you buy it from here or is it too risky? Let me know in the comments down below. So these were the earnings in general for the next week, but we have a really important date, 2nd of November on Wednesday. On Wednesday we will have the rate hike from the Fed. It will most likely a 75 points rate hike. If they increase the rates like 75 or 50 points in December, it will be very important for the stock market. Either we will rally or we will crash. We already know that which data Jerome Powell and Fed looks, and it doesn't look good. As you remember, on 13th of October we had this inflation data of September and it was not good. It was 8.2%. Inflation doesn't go down as expected. On the other hand, we had this PCE inflation data on Friday and inflation doesn't decrease but increase. As long as we have high inflation data, Fed will be hawkish, not dovish, I think. In general, Fed looks to 2 things. One is inflation and other one is unemployment. Inflation is rising and employment data is still strong. For example, here you see the weekly initial jobless claims and we don't have a spike, so it means employment is still strong. I mean, looking at this data of inflation and unemployment, I am not so bullish about Wednesday. We have only one data that can be bullish. Fed looks to a 10-year 3-month Treasury yield spread. And here you see the 10-year Treasury 3-month spread. When it becomes negative, that means we have tightened enough. And now we have seen recently these negative levels of this spread, and that can be signaled to Fed that they have tightened enough. Maybe they will reduce the magnitude of the rate hikes in the future. At the moment, everybody is hoping that Fed will reduce the tightening and cause a bullish rally in the stock market, but I am not so bullish. Due to these Q3 earnings, Nasdaq and tech companies didn't perform well, especially in the last week. On the other hand, due to this inflation environment, value stocks in the Dow Jones performed really well. For example, for Dow Jones, we have this downtrending line since the beginning of the year, and every time we touch this point, we retreat back and made a new low. So in this time we are also here and came to this trend line. After the Fed's meeting on Wednesday, we may have a correction from these levels, and this retreatment also can affect the Nasdaq and tech companies. If we have a correction, hopefully we will make a higher low and create this bullish line. Thank you for watching until this time of the video. I hope it was helpful for you. You had some great insights. So let me know what you think in the comment down below. What do you think about the stock market? Which stocks are buy? Which stocks will perform better than indices? Don't forget to give a like and subscribe to our channel. See you in the next videos.